but it's really about managing all of those disciplines.
Right.
And our approach is, the way we say it is, first, let's define what our objectives are, but then manage all of those disciplines to achieve those objectives.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Andrew Lofredo is the CEO of CRE Vertical Advisors. He leverages his extensive experience in commercial real estate to provide private investors and family offices with a tailored investment and services platform. Andrew, welcome to the show.
Thank you. Thanks for having me.
Absolutely. The pleasure is mine. Andrew, there are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
Sure, and that's a long time, since it's been close to 30 years, but I'll do my best. So, I've been in real estate for a long time. Actually, started off doing residential brokerage, believe it or not, but really quickly transitioned into commercial real estate. And I'm sure we'll get into this, but I've touched nearly every aspect of the commercial real estate industry. Started off as an AR/AP clerk out of college. Transitioned into tenant rep brokerage, representing office tenants looking for space. While I was doing that, I actually became a property manager and went to law school in the evenings while I was a property manager, and ended up practicing law briefly in real estate. But quickly transitioned back to property and asset management. Worked for a number of large firms, CBRE, and then transitioned into working for some of my clients, direct owners. And through that experience, developed a good model for working with wealthy families and family offices and direct owners, and ultimately created my own shop to do just that. Bring together some institutional management with working with those the nuances of family offices and the and entrepreneurial environment.
Yeah, absolutely. Well, tell me this, what are some of the problems that you guys solve for that family office, high net worth individual?
It can vary, and that's where actually one of the problems we solve is there's a lot of nuances in the way family offices are structured. It requires a bit more hand-holding than working with institutional investors. Sometimes that's just a matter of, frankly, dealing with disputes, dealing with families that don't see things eye to eye. Sometimes it's dealing with varying degrees of real estate knowledge. Sometimes it's inherited wealth. There's taking the next generation, under my wing and helping them understand what they're working with. And really, some of it just comes down to it's a fundamental part of the way we approach the business, is just working with the family to clearly define their objectives. Because it's not always the same. And these might not even be the same among family members, but working to set a clear objective is a critical component of what we do. And then obviously delivering the strategy on that.
Right. So family offices may come to you with a portfolio they own, or they may come to you and say, hey, we would like to have a portfolio that looks like this. And then you guys will go out and both help them acquire those assets or manage those assets. Is that right?
Exactly. And sometimes it's a matter of, both, really, taking over an existing portfolio, working with them. A lot of times these are very long-term holds. It's not your traditional, what you would see in terms of the, 5-year hold, buy a value add, do your strategy and sell it in 5 or 7 years. Right. A lot of these families, these are legacy properties. So it's a matter of really looking at them and saying, okay, how can we continue to add value to this? Is it still right for you to own this based on your objectives? And if we're going to sell it, there's obviously additional tax issues when a family has held a property for 40 years, normally has a zero or zero basis. So then we have the issue of, okay, how do we move into the next, whether it's a 1031 or some other tax strategy? So it's, and just explaining that to them and understanding what their opportunities are, that's again a critical component of it. And not everybody, and I don't mean this in a negative way, not everybody understands it because it's not what they do. They may have inherited, a lot of these companies, for example, were retailers. They're no longer in the retail business, but they own their real estate now.
Right.
So they become real estate people, and they need somebody to really guide them through that.
What's the difference in the types? And this is probably more of just a curiosity question, but working with someone who has bootstrapped their way to wealth versus working with the person that inherited it. Is there a different kind of approach you have to take with those clients?
There is, and it's and again, it can vary because I've dealt with families where you have the bootstrapper, then you have the next generation that worked with the bootstrapper, and then you have the next generation that's removed from the bootstrapper,
Right.
and each one has a different approach. Sometimes it's really just a matter of actually understanding the business. The further removed you get, the less there is of an understanding of the business. So it becomes a bit more educational.
Right.
And that's part of what we do. It's speaking in layman's terms. I'm not just, this is the cap rate, this is the IRR. It's, and again, it's not meant to be, sound like a negative, but it's a matter of how you explain what you're doing and how you're adding value. So sometimes the value, it's not as clearly understood the further you get away from the bootstrapper in terms of what you're doing. So it's a matter of education, I think is the critical part of it. And frankly, when you're dealing with family offices, after a certain point in time of being removed from the bootstrapper, it simply comes down to an expectation of continued cash flow from the properties, almost as if it's the guaranteed income. So when you take over that type of portfolio, there is also an education process on the importance of reserves, the importance of how you actually continue to maintain that property. So it requires a lot of dialogue and explanation, on why I'm doing what I'm doing, really to help them preserve their wealth, but to make it clear what the strategy is.
Yeah, I bet it does. It seems like a very white glove sort of service that you guys are providing there. What's it been like building your own kind of internal team to help you accomplish this?
I think that's an important part of it, the way you mentioned the white glove service, because it really is. When I deal with my clients, in addition to the regular real estate aspects of it, we're dealing with trust structures and multi-generational items. So I often, understand their structure better than they do because I'm in the weeds on it.
Right.
So when I'm building my team, it's also making sure I have a team that's interested in that kind of varied approach, and that hand holding. So as I look for people, it's definitely critical that we have the real estate knowledge, but also I don't hire people that will say that's not my job description, because when you work with the types of clients we have, you get thrown a lot of curveballs. You need to wear a lot of hats, and that's what I love about it. I mean, today, as a perfect example, I was negotiating a contract this morning. I'm having this great conversation with you, and then after this, I'm out to meet some contractors to walk through space.
Oh, wow.
And that to me is what excites me about this role and about what we do here. Again, it gets very granular, and that's what I look for, from my team.
Yeah.
And the important part, though, is, don't get me wrong, I need to set a very clear structure and guidelines so people know what they're accountable for. But we all need that flexibility in our job descriptions.
Right. Absolutely. How would you say your clients approach the way they invest versus just a regular guy off the street? What are some different methods or some ways that you see the family office, the high net worth individual, the private investor? What's their strategy, and what's something we can learn from what they're doing?
I think, that's, again, I appreciate the way you worded that, because it's something that I look to do with others that I try to bring in on the investments. It's a focus on generational wealth and a longer term hold. There's a number of different ways to look at it. There's a focus on cash return tends to be the dividends, the distributions tend to be a focus.
Yeah.
But there's also, well, you'll often see some patient money. Again, it's not the 3 to 5 year flip. It's okay. If I were to buy this property and hold it long term, pass it on to the next generation, what's that going to look like for me? What do I need to invest now? And what will that look like in the future? It also tends to be lower leverage. We're often, and that allowed us to do, right as the interest rates were going. With one of my clients, I did 7 refis. And the reason we were able to get attractive rates was because their LTVs were mostly below 50%.
Wow.
So it's not looking for the quick IRR in terms of just leveraging and then selling based on some appreciation. Not that there's anything wrong with that. I've done that in my life as well.
Sure.
But their focus tends to be longer term.
Wow.
In how they approach it.
And that's very different. I mean, we're working on some stuff right now that's 8 to 10 year, and pitching that to investors. It seems long, compared to a lot of stuff that people are seeing out there, and they're like, oh, 8 years. I'm like, yeah, it's not that long. I mean,
really not. But when they're used to it, a 3 year, or they hear a 3 or a 5 year, and 5 years is the long part of it.
Right.
It starts to seem long. But as I'm sure you're seeing, things are. There's a lot of uncertainty in the market, and it puts us in a position where it takes a little longer to execute a strategy. And you have to build that in. You have to build that into it.
Right. And especially after coming off of the high of all these 5-year projections that ended up being 18-month, turnaround deals in multifamily and everything we've seen for the last 4 or 5 years. It's 5 years does seem like a long time. I like the way you put it there: patient money, a focus on cash return, lower leverage. Is there anything else or some shifts that you're seeing kind of even now in the way that your clients are approaching today's market?
Well, it's a little tough now with with interest rates where they are.
Yeah.
It's harder to execute, and that's also, it's part patience, but sometimes patience leads to waiting on the sidelines too much. So there's that balance between, are we being patient, or are we just out of the game? Right. So I think that's part of it. And then and rightfully so, when you're dealing with family offices, there's opportunity costs involved. If we're looking to buy a retail property that the seller still wants to sell it at a 4 cap because they haven't made adjustments to where we are in the market, but now we can just put money in a money market or a CD and make 5%. So it's not just real estate. Family offices look at a larger opportunities to put their money for their wealth. So that comes into play as well, as what where else can we put this money, and what would our returns be? So that's certainly a factor, and I feel like I'm getting that question more as interest rates have gone up. It was very easy to underwrite when you're doing a deal at 3.2% as opposed to 5 or 6.
5 or 6, or I'm even seeing stuff even a lot higher than that, which is
right.
Which is crazy. It's crazy times that we are in. So CRE vertical, I mean, you guys have to manage a lot of different people. As you're working with these family offices, you've got everything from what you guys do to asset managers to, and I'm not even going to name them all. Maybe you can talk to the unique challenges maybe that family office comes to you guys to solve as it relates to that.
Yeah, and that's really the way we designed this firm. As I was mentioning in the beginning, I've touched just personally have touched a lot of different disciplines within the real estate, within the real estate industry throughout my career.
Yeah.
And as part of that, as I grew throughout throughout the progression, I realized that really all of these are connected. And to provide, true quality and value add, it's not just doing what you're doing in silo, it's managing all of these disciplines. And that's really where the name comes from. We manage all the disciplines within the real estate vertical, hence the CRE vertical. And that covers really, there's of course asset management, there's property management, there's leasing, there's construction, there's the acquisitions and dispositions, there's risk management. And that's just within the real estate world. And we handle all of that. But then when you're dealing with family offices, there's also working with outside folks. There's the legal, the estate planning, making sure we're communicating with their estate planners. There's tax planning. We do regular property accounting, but we're not tax people. We coordinate with their tax people. And the same thing with attorneys. I'm an attorney myself, but as I like to refer to myself as a recovering attorney, because I don't practice. I'm a real estate business guy who happens to be a lawyer. But we work very closely with outside counsel on the leases and their other agreements. But it's really about managing all of those disciplines.
Right.
And our approach is, the way we say it is, first, let's define what our objectives are, but then manage all of those disciplines to achieve those objectives. And hence that's where, I say it a lot. It might be corny, but it means something to me, is where we connect the dots across the industry. Because that's our value add. Especially when you're working with, more of an entrepreneurial or a family organization, is we may not do everything in-house, but we try to, as best we can, is to help them connect all of those disciplines to really get after their objectives.
Right. Because the amount of time it takes just to coordinate all of those things can be mind-numbing. I mean, I'm just thinking about a deal we were doing recently where my attorney was talking to their attorney, who was talking to them, who my attorney's talking to me, and we're going back and forth and trying to make, and it was just a single purchase and sale agreement. I mean, it was not that hard, but it was still 20 emails and a lot of like, hey, but there's subparagraph B, point 9. You're like, okay, this is so doing what you guys are doing, I can only imagine brings incredible value to those family offices, because this is not just one deal. This is at scale. And you really need to be, you guys in the quarterback position, running the whole thing.
Yeah, and that's the way I prefer it. I mean, sometimes it obviously creates, stress, but, ideally we do asset management and property management. Generally, I want to do both, not or just the asset management. We will sometimes do, for select clients, just property management, but being in the driver's seat, or at least having a seat at that table, is our value add, but it also makes my life easier because I can come in and quarterback it. And at least try to drive it, as opposed to, you can sometimes end up chasing your tail if you're not in control of the situation.
I can only imagine. Andrew, this has certainly been insightful. I do appreciate you taking the time to come on the show today. You've told us a lot. Your history in and of itself of just what you've done in the real estate space is really, really cool. You've given us some nuances to how the family offices think into what they're investing in right now and kind of the strategies they are taking. The idea of generational wealth and thinking about it from that perspective, I think, was a really cool point you made there as well. But certainly appreciate you coming on the show today. This has been great. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Well, you can certainly check out our website. It's crevertical.com. There's a link to my LinkedIn there as well. Feel free, of course, to fill out one of our forms and contact us. We have a book a call if somebody, and it's a free consultation if somebody wants to talk to us. Or, of course, subscribe to our newsletter. And it's fairly easy to find me on LinkedIn, which is probably where I'm most active from a social media standpoint. So it's just Andrew Lofredo. Again, happy to connect with anybody on that platform.
Andrew, thank you so much for your time today. I certainly appreciate it.
Yeah, thank you. Glad to be here.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much, and hope to catch you on the next episode.